All right, today we are pulling back the curtain on something that's basically the invisible operating system of the entire global economy. It's a set of rules so important it shapes how trillions of dollars move around the world every single day. We're talking about IFRS, the global language of business.
So let me ask you something. Let's say you're an investor and you're looking at two different companies. One's in Tokyo, the other is in Berlin. Now, they both look pretty good on paper, but how do you really know? How can you be sure that their financial reports are actually telling the same kind of story, using the same set of rules?
For decades, that was a massive problem. It was almost impossible. Every single country had its own unique set of accounting rules, its own financial language, if you will. Trying to compare two companies was like trying to read two different books in languages you don't speak without a dictionary. It just created a ton of confusion, it hid huge risks, and it made investing across borders feel like a total gamble.
But what if you could create a universal translator? A single unified language for business that everyone, everywhere could understand. Well, that's the idea that pretty much changed everything.
And that's where IFRS comes in. IFRS stands for International Financial Reporting Standards. And honestly, the best way to think about it is like the Rosetta Stone for the financial world. The whole idea was to create one single set of high-quality, easy-to-understand rules that everyone agrees on. That way, a company's financial story is clear and, most importantly, comparable, whether that company is in Sao Paulo or Seoul.
And look, this wasn't just some boring project for accountants to nerd out on. The mission here was way bigger. It was about injecting trust, real trust, into the global financial system. By getting everyone to play by the same rulebook, the goal was to create transparency, demand accountability, and just make the whole system of global markets work better and more efficiently for all of us.
So what does this rulebook actually look like? Well, it's not just one big book. It's actually a framework with a few different layers of standards and guidelines. So let's break down the most important parts. Okay, so the whole thing is set up with a clear hierarchy. Right at the top, you've got the main rules, the core standards. These are known as IFRS and IAS. And don't worry, we'll get to why there are two names in just a second. Then you've got a second layer called Interpretations, which basically clear up any confusing parts. And finally, there are practice statements, which are more like helpful suggestions. It's all layered to make sure everything is as clear as possible.
So you're probably wondering, wait, why two names, IAS and IFRS? Well, it's really just a history thing. The IAS, or International Accounting Standards, were the originals. They were the foundation. Then, after 2001, the organization that makes these rules was restructured, and all the new standards they put out were called IFRS. The main thing to remember is that a lot of those original IAS are still in use, and they all work together with the new IFRS as one big unified system.
Okay, I know this can all sound a little abstract. So, to make it more real, let's look at a couple of super important standards and see what they actually do in the real world. First up, a real classic, IAS 2. This one's all about inventories. It sets the rules for how a company has to calculate the value of all the stuff it has in its warehouses waiting to be sold. Whether that's cars on a lot or shirts on a rack. And this is not a small detail. Getting this right is absolutely crucial for figuring out what a company is actually worth. Now let's jump to a much more modern one, IFRS 15. This one was a total game changer. Before it came along, the rules for when a company could say it officially made money were kinda all over the place. IFRS 15 created one single powerful model for everyone. So now it doesn't matter if you're selling software or building bridges. This one standard tells you exactly how and when you can count that money as revenue. And one more, let's look at IFRS 16, which is all about leases. For years, companies could have massive rental agreements. We're talking entire office buildings, fleets of airplanes that were kept kind of off the books, hidden away from the main financial statements. IFRS 16 changed all that. It forced companies to put those leases right there on the balance sheet, which gives investors a much, much more honest look at a company's real debt. So we've got the big standards. But business is complicated, right? What happens when some new, tricky situation comes up that isn't perfectly covered in the main rules? Well, that's where that next layer of the framework, the interpretations, comes in.
Here's a really great way to think about it. If the standards tell you what you need to do, the interpretations tell you exactly how to do it. They give that critical guidance for applying the big rules to very specific and often very messy real-world problems. And who writes these all-important clarifications? Well, it's two committees, and it makes perfect sense.
The SIC is the committee that clarifies things related to those older IAS standards. And the IFRIC, that's the IFRS Interpretations Committee. They handle all the questions about the modern IFRS standards. Their whole job is just to make sure everyone is applying the rules the same way.
So when a team of accountants at some big global company runs into a totally new or confusing problem, they look to these interpretations for the official answer. You can literally think of it as the ultimate official FAQ for all of global finance. It's what keeps the whole system consistent.
Okay, so we've gone through the rules, the committees, the acronyms, the whole shebang. But why should you care? Why does any of this actually matter in the real world? Let's zoom out and connect all the dots.
When you get right down to it, IFRS is really a global agreement on financial honesty. It's a whole system designed from the ground up to build and protect trust. And trust is the essential currency that allows businesses, investors, and entire markets to connect and work together across the globe.
And the benefits, the payoff from having this global standard are just huge. It means you can do a real apples-to-apples comparison between companies no matter where they are. That level of transparency gives investors way more confidence, which in turn makes it so much easier to invest across borders. And that helps money flow to where it can do the most good, fueling growth and new ideas.
And that's really the final takeaway here. IFRS might sound like a super niche topic for accountants, but it is so much bigger than that. It is the invisible infrastructure, the silent operating system that allows our complex, interconnected global economy to actually function every single day.
So what's next? I mean, as our world keeps changing with things like crypto, AI, and a huge new focus on sustainability reporting, this global rulebook is going to have to change with it. The real question isn't whether IFRS matters now, but how it's going to adapt to keep building trust in the economy of tomorrow. Something to chew on. Thanks for watching.